Good morning, everyone. Welcome to the Macro Snapshot. We are Tuesday, August the 5th, 2025. To be honest, not a huge amount going on overnight. What we do have Trump speaking at 8 o'clock, so in about half an hour or so. I think he's giving an interview on CNBC. That could be interesting just because he has promised to reveal his nomination to replace Adriano Kugel from the Fed, who left the Fed Board of Governors. And that could also be not only someone who's going to become a member of the Board of Governors, but could also be next in line to be the chair. So that'll be quite interesting if he does come up with the name. Secondly, there could be any sort of more information about tariffs or whatnot. So we'll have a listen to Trump at 8 o'clock and see what he has to say. Apart from that, we do have some data today. Well, when I say data, we have the ISM services, which of course is a survey, but it will be interesting to see, if that continues the theme of sort of weakness. Remember last Friday, not only do we have the heavily revised downwards sort of non-farm payrolls number, but after that at 10 o'clock, we had the ISM manufacturing, which was also a bit on the weak side, the survey. And that was one of the contributing factors which caused some weakness in the stocks and caused the bonds to rally. So it will be interesting today to see if the ISM services remain strong. It's meant to be. The market is expecting a number above 50, so 51.5, which is higher than last time. It's going to be interesting in terms of the inflation debate to see the prices paid, which remains elevated, estimating 66.5, but a smidgen below where we were last time. And then, of course, looking for the new orders, how are people thinking about the future of the economy? And then obviously the big one is employment, which remains under 40, under 50, so in contraction territory. Oh, the other thing I wanted to say about Trump, it's possible that he will mention the new person who wants to take over at the Bureau of Labor Statistics. And so the market will be looking at that. Excuse me. Okay, so in terms of other stuff, we had Daly last night. Let's just look at what's going on the Fed. We had Mary Daly from the San Francisco Fed. She's a non-voter this year, but it was interesting that she said that her base case could be for greater, so more than two cuts this year. Now she is a non-voter. Maybe even more interesting, we'll get sort of Collins and Cook, who are voters, speaking tomorrow. So we're going to get a bit of a sense. I just wonder because normally, just watching the markets over the years, my experience has been that they all start to sing from the same hymn book. And it could be that, maybe Jerome Powell, if he has decided to maybe go in September, he could start encouraging people through private phone calls, maybe to sort of start educating the market that a cut is coming. So far we've had Daly. We know that we had the two dissensions with Bowman and also Waller the other day, last Wednesday. And we know that Trump is about to appoint a third kind of dove to the board. So it's going to be, in my humble opinion, sort of interesting to see what Collins and Cook, who are voters, as I said, what they say tomorrow. Because if they also start talking about, potential for a labor market weakening and potential for more cuts, that to me starts to smell a little bit as though maybe Powell has been on the phone and is sort of feeling the way out to sort of start preparing the market for a cut or two. We shall see. On the other hand, maybe not. We'll have to see what's going on. Okay, but as just having a quick look, we can see that the market is still pricing in over two cuts, so 2.3 cuts by December. It's come off a little bit. If we actually look here, we can see that we had that huge sort of dovish repricing of about 12, 15 basis points on the Friday. It's basically been in a range since then, sort of a little hawkish, a little more dovish, a little hawkish, but essentially the market's settling here for December pricing. Anyway, this is December pricing at about 59 basis points, which of course is two cuts of 50 plus another 9 basis points. So what's interesting there is that it's not just two cuts now, but we are potentially even moving in, for potentially a little bit more. So almost up to 2.5 cuts. And if we start getting, let's say, a dovish ISM services this morning and maybe a couple of the Fed speakers, Cook and Collins tomorrow, who knows, that might go up to 2.5, 2.6 cuts. And I just saw some options flows yesterday in the sofas. A lot of the big institutions, it seems, are positioning potentially even for 3 consecutive cuts. So not only in September, but also in October and October as well as December. So 3 cuts for a total of 75 basis points, which would push this number here, the implied change of rate, from 59 up, of course, into the 70s. So that's kind of something interesting to have a look at. Other things to be looking at, we had a little bit of a pushback from the stocks yesterday. So if you just look here, the E-minis, the S&P 500, obviously they came down. But again, if you look at this chart, and let's just go back in time a little bit to put this all in perspective before we start talking about a crash. This is still a very, very bullish chart. We can go all the way back, however, you long. I think everyone knows this chart. So the point is that, yes, we did have that sort of a Liberation Day sort of scare about the tariffs, but it looks as though the markets are increasingly sort of pricing in the tariffs. The big question now really is going to be, are we going to get some sort of medium term, 2, 4, 6 month slowdown where these tariffs do become some kind of sort of tax, essentially a new consumption tax, slowing global trade, inflationary for the US consumer suffers, et cetera, et cetera? Or will people just sort of take it as a one-off price hike and just sort of shift their spending patterns a little bit? It's going to be interesting to see. So at this point, with the imposition of the tariffs on August the 1st and the labor market, the stock market did sell off. But as you guys can see here, we haven't even touched the 50-day moving average. And I think even if it were to go down there, probably some buyers would come in there around about the 50 EMA, which is at about 6,200, which also coincide, as you can see, this top of this trading range, and also that sort of a horizontal support there. So I think, from the equities point of view, any further weakness in equities, the narrative that the market, the economy is shutting down, maybe, but we're going to have to start seeing the data and the surveys supporting that. So this morning we have ISM services. Let's see what happens. We don't have a lot of other data. Globally, we have some PMIs happening. What is happening though? I would say we do have AMD as well, which is reporting after the bell. So just to see if this whole sort of AI, artificial intelligence narrative is continuing to be strong. Let's see what AMD has to say. One thing I'm keeping an eye out is, let's say, the Russell. You see here the Russell, though, the small caps, they are definitely underperforming. So there's the Russell. Now, compare the Russell compared to, let's say, or actually even let's look also at the equal cap, which has come off a little bit more. So definitely the equal cap and the Russell underperforming something like, for example, you see NASDAQ and the ES. So the breadth is not massive. And again, I was reading some data yesterday that still, the market cap, it's still very concentrated in those top, 6 or 8 companies. I think most of the profits, I can't remember the number, but the profits, 30% of the profits are coming from, like 5 companies and whatnot. So it's still a very concentrated market. There is still scope for this to weaken, but you have to say that we're going to have to see weakening broadly in the tech market and capex in things like the AI rollout and whatnot. So let's just keep an eye out on all of that stuff. Other stuff happening is that it seems as though Trump is sort of single-handedly trying to sort of destroy BRICS. So he's been attacking sort of Brazil, Russia, India. Specifically, he's been attacking India in terms of the fact that they buy oil. Now we know from Russia, and therefore supporting the Russian war machine. And we know that Trump is coming up to some kind of Trump-imposed deadline about a ceasefire in Ukraine. But it is interesting that India imports about 1.7 million barrels per day of oil from Russia. So it's quite a lot, 1.7 million barrels per day from Russia. That money obviously is going to Russia and helping it with the war effort. So Trump now is trying to do a sort of triangulation, and he's essentially trying to sort of impose threats or impose extra sanctions, threatening sanctions and extra tariffs on India if they continue to buy Russian oil. Of course, what he's also trying to do is to put more pressure on India, not only for the Russian oil, but also just to sort of try and push India to open up their economy a little bit more. And I think the danger of this, if anything, is that pushes India into the arms of China. But anyway, just in terms of oil, the oil market, you could say, well, is this being sort of supported at the moment? Let's just have a look at oil. Where's oil? Not exactly. And we know that OPEC Plus, they did open up the spigots the other day on the weekend. They opened up by about 500,000 barrels extra production. So we can see here that oil really, at that downtrend that I was saying yesterday, is pushed down here. Quite a lot of support along this level here, around about $65 on the WTI. So at this point, could this go down a little bit more? Yes, but I mean, the global economy is still, motoring along in a relatively robust way. So I think, could oil sort of poke down here, maybe stop out a few people? There's probably a lot of people with stops at, let's say, about 64.50 around about this area. So it wouldn't surprise me if oil maybe pokes its head down below there. But I think at that point, even though OPEC Plus is increasing production a little bit, the time spreads, the calendar spreads are still relatively robust. The global economy is doing okay, and we're slowly sort of adjusting to sort of increased tariffs. It seems. It's not to say that in 3 or 6 months, the global economy and especially the US economy might not start weakening. But the data at the moment, the only thing we've really had, to be absolutely honest, we had slightly weak ISM manufacturing, and we had those revisions on the payroll numbers. But I think there's a lot more information we need to get about the US labor market. Anyway, all that to say that oil, as I say, I think could find a little bit of support around about here, maybe at $64, something like that, once it stops everyone out. I don't really see a case where oil should, collapse down into the 50s. And remember that, 50s is a price where, a lot of people stop producing in the US. We know that it becomes hard for them to make a profit, therefore less supply, and that starts to put upward pressure on the price. And if Trump does go ahead with his sanctions on Russian oil exports, of course, the Russians will find a way on the black market to get those barrels to market. But the reality is, in the short term, there could be a bit of upward pressure as well. Anyway, let's keep an eye on that. Other thing to keep an eye on, I'm just sort of thinking, all of this pressure on Russia, Brazil, and India, especially Brazil as well, politically, Trump threatening 50% sort of tariffs, saying that they're not treating his old buddy Bolsonaro well. He's under house arrest, the ex-president. But all that to say that there is quite a lot of pressure on the EEM market. So let's just see if the US dollar continues to rally a little bit. I'm just also keeping my eye on EEM, so the emerging markets. You can see here it's taking a bit of a battering. Well, I don't want to say a battering. It's coming off back down to the 50-day moving average, moving up a little bit. So let's just keep an eye on that and see, if these very heavy sanctions on countries like Russia, Brazil, and India come into place, that might sort of put a little bit of downward pressure. Just something to keep an eye on EEM. Apart from that, we do have the auction today. We have the 3-year auctions, and we can see if we look at something like the ZT, so the 2-year, it's coming against overhead resistance. But that's the same if you look also at the 5-year bond. If you look at the 10-year, all of them are coming up against overhead resistance. So it's natural after that huge run up in prices and the fall in yields on Friday that some of the US bonds are just having a bit of a pause. And you can see here that the 2-year is coming off a little bit in terms of price this morning. And we do have the auction of the 3-year tenor coming up at 1 p.m. So let's see how that goes and see what the demand is for that. But my point here is that it wouldn't surprise me if there's a bit of a concession built into the price. So if we see the very front end of the curve, so the 2 and the 3-year just come down in price a little bit over the morning session, just to sort of accommodate, make that easier passage of the auction supply to allow it to be more easily absorbed by the market. So to me, this doesn't mean that this is over. It just means that maybe it's retracing, maybe just down to a Fibonacci level, and then could be headed up for a run up. But of course, that's going to depend also. Let's say, for example, ISM is strong. That could also push that down for a little bit. So, let's have a look at ISM and the auctions, but it wouldn't surprise me if, as I say, to build in a concession, if ISM is a little bit higher than expected, this falls off, sort of 4, 5, 6 basis points, and then we'll see what's happening. Apart from that, something else I'm also watching is the US Swiss franc cross pair. So you see here the US dollar has made a little bit of a comeback against the franc, but overall, the US dollar has lost a lot against the franc this year. And the reason I'm mentioning is this, because we know that Trump imposed a 39% tariff on Switzerland, which is a bit crazy because the only real cause for that sort of a trade deficit is gold. There's a lot of gold pumped in. Well, no, let me be precise. There's a lot of gold exported, physical gold bullion imported into the US from sort of Switzerland over the last sort of 12 months, and that's made the trade deficit on paper in favor of Switzerland. But the reality is, there's nothing sort of abusive, and Trump and the White House have often sort of said that they're after currency manipulators like China, who are artificially keeping their currency low to help their exports. But that's definitely not the case with the Swiss franc. I mean, if we look at the Swiss franc, if anything, we can see that since whereas that, beginning of this year, it's essentially sort of appreciated about, 12, depending where you measure, let's say about 14% or so against the US dollar. So the US dollar has actually depreciated about, 12, 14% against the Swiss franc. So you cannot at all accused the Swiss National Bank of being currency manipulators. And so this is a bit of a conundrum, bit of a sort of a head scratcher for the Swiss to try to figure out what the US is up to here by slapping these 40% tariffs. So let's just see, because they might want to let the Swiss franc weaken a little bit. That's something, and who knows, maybe the Swiss National Bank at this point wouldn't mind just seeing the Swiss franc weaken a little bit. And actually, more to the point, maybe if we go across to the Euro Swiss franc, we can see that again the euro has been under pressure essentially for most of the year. Not massively, but is trading a little heavy against the Swiss franc. So let's just see here if the euro as well maybe has a little bit of a possibility to kind of trade a bit higher. You can see here it's between the 50 and the 100-day EMAs. Let's see if the euro can maybe push up a little bit higher, and if maybe the Swiss National Bank doesn't push back against that. So definitely keeping an eye on the Swiss currency, on the franc, and also just the politics there with that 39% tariff, and whether the Swiss come back with some kind of sweetener deal. There's talk in the air that they may reduce the pharmaceutical costs of some of them, and that would sort of please Trump. That would give him sort of a win, which he can announce. Of course, as we know, that one of the big sort of exports from Switzerland into the US is pharmaceuticals. That's why my skin looks so good. That's a joke. And sort of healthcare products. Right, and as I say, we'll see if the Swiss want to offer some concessions, and maybe then Trump will reduce the tariffs from 39%, and that could alter the Swiss franc. Okay, guys, I'm going to leave it there just for the moment. Things also I'm keeping an eye on is also the dollar, of course, because it had. I mean, if we put it on, let's say, a 4-hour chart, just to sort of break it down a little bit more, and I'll get rid of some of these moving averages here. Yeah, you can see the dollar. It did have a push, but essentially after Friday and the revisions to the payroll numbers, the employment numbers, you can see the dollar. Now it has had a little bit of a comeback, but this is pretty pathetic. And if we actually look here at what's happened here, so we see this sort of from this impulse here, this on the fib, it's at about the 50% fib. So, this is a place where it's sort of stabilized here at this 50% retracement, as you see here on the 4-hour chart. But this is fairly pathetic. And if we actually just take this off and look at it from the other direction, you can see here that even on the very, very short-term fib, so I'm just measuring this retracement here, we haven't even got back to 38% on the US dollar. So a fairly feeble sort of bounce back after falling on Friday. And you've got to say that, well, probably the direction of the US dollar at this point really is going to be determined by the data and interest rates and whatnot. So let's just see. But at the moment, this is not really an impressive pushback. We'll see what's happening. As it goes forward, and maybe ISM can give us a bit more direction. That's something else to be looking at. Apart from that, I think that's about it for today. Yeah. The main thing, 10 o'clock, we have the ISM services. Let's see the market reaction to that. And Trump, as I say, is speaking in about 15 minutes. So there could be news on the replacement at the Fed, and also for the head of the Bureau of Labor Statistics. Thanks very much. Have a great day, and we'll keep the conversation going.